Good morning, traders. This is Kevin Craney with RJO Futures in Chicago, talking to you about interest rates this morning. Looking at the interest rate market, things are muted really in the overnight session with interest rates here in the United States, but certainly a lot of activity if we go over to Europe and look at what happened overnight. In Italy, to start things off, we had a €4.5 billion auction of 3, 7, and 8-year paper over in Italy. Looking at that auction, the 3-year auction went great, a great bid to cover ratio. The only problem is the yield kicked out to 530 basis points, all the way from roughly a 200 or 300 basis point prior auction on those 3-year notes. But then when we kick it out to the 7 to 8-year paper in Italy, certainly had a much lower bid to cover ratio, showing that not a lot of market participants willing to step out on the longer end of the curve with that Italian paper, which could spell trouble coming down the road if Italy needs to move out beyond that 3-year, 10-year to fund themselves. Looking then again at Spain, the other domino here in the peripheral, looking at 690 basis point 10-year yield on Spanish paper, went up over 700 basis points in the overnight. Really what's driving that certainly is a downgrade by Moody's of Spanish sovereign debt to Baa3. That's just a level above junk. So certainly things not looking any better over in Spain. Cyprus was also downgraded by Moody's, and a lot of this really just comes on the fact that the €100 billion bailout that we saw over the weekend, really all it does is add to the senior debt load of Spain and increases the chances that they're going to have to go back to the ECB for a bailout of the entire country, rather than just a bailout of the entire banking system. When we look at some of the internal credit markets and some of the money market, we see the Euribor IOS spread really staying afloat at about 38 basis points, and it's been stuck between 37 to 42 basis points really since about March. And what that tells us is that that banks lending to one another, there really is no trust there. So a lot of them are going to the dollar swap market, and we have seen that dollar swap spread actually come in where it's gotten a little bit cheaper for them. So what's this all spell for U.S. interest rates? Well, really, I think continue to see a lot of opportunity on the longer end of the curve at the 30-year Treasury bond right now. Prices between 148 and roughly about 148.30 to 149. I think you continue to see opportunities, particularly going into the weekend. We have this Greek vote. We're not sure what's going to come out of that. Certainly it's probably going to spell big things for Europe. And likewise, we have a G20 and a Fed meeting next week. A lot of people looking for something out of the Fed. I don't think you're necessarily going to get it. The bar has been set high. We had bad economic data looking back here at home today. Jobless claims up for the week, revised higher for the prior week, and we did see CPI coming in month over month down, so that doesn't spell good news for the U.S. economy back here at home, and again just adds further support to the long end of the curve, the 30-year bond, more so than the 10-year Treasury. As always, futures trading carries risk, so does options trading. Please give me a call. We can discuss any of these opportunities with you as well as other markets. My number 888-596-5817. Thanks.